Man, we have a great show for you today. We've got some stats, not only from the past week here in Rutherford County, uh, got some really good graphs for you to show you how the real estate market is going across the nation and in this area. We got some information on mortgage portability. Should really be a great show. I appreciate you joining us on the Murfreesboro Real Estate Report. I'm John Turner. I'm the team lead of the Turner Victory Team at Onward Real Estate. We bring you this information every week. First of all, do me a favor. If you're watching this for the first time, please make sure you subscribe at the bottom. And also leave us a comment. Say first time. Give us the zip code you live in. Anything to let us know that you're watching us. Our audience has been growing over the past several weeks and months, and we certainly appreciate you tuning in. Also want to let you know we have been updating this or sending this out only by YouTube in the past, but now we are actually putting it out as a podcast as well. We're on Spotify and should be on the other podcast platforms before long. So pretty exciting stuff. All right, let's jump right into what we've got for you today. I put it a little bit in a slideshow form. Haven't done that before. Just trying to change things up a little bit, make it a little bit easier for you to see this information. Again, this is the Murfreesboro Real Estate Report. We focus on Murfreesboro, the Smyrna real estate market, Vergne, Eagleville, Tennessee, and all the areas in between. We actually, from a real estate standpoint, do cover all of Middle Tennessee, but we are based in Rutherford County and definitely would consider ourselves experts in that area, and we'd like to think that our clients would as well. So without further ado, here is this past week's information. If you look at this, I always go across the bottom first. Let me back up here. We had 1,523 homes go we have 1,523 available homes on the market right now. I'll go ahead and tell you that is one less than last week. We had 1,524 last week, so pretty steady there. If you remember, a couple weeks ago, we were below 1,500. But for the majority of the past 3 or 4 months, we've been above 1,550. So we are seeing that slight decline as we get into the winter months, the fall months, the winter months get close to the holidays. Some people pulling their houses off the market. It's kind of the natural cycle here in Rutherford County. Had 106 new listings this week. Our pendings rebounded. This week we were down quite a bit last week. We'll talk about that here in a second. But 96 homes went under contract for the past week. 68 homes actually closed. There were also 83 homes that were pulled off. Either the listings expired or the sellers just decided this isn't the right time to sell. And our market over the past 3 months, we've closed a little over 1,300 homes. So whenever people talk about homes may or may not be selling, in the past 3 months, there's been 1,300 homes sell. That's down from a quote unquote normal market. But it is certainly steady, and compared with the inventory we have, it's actually a decent number there. Currently, we have 3.4 months supply of inventory on the market. If you look at our new listings, the light blue is this year, the dark blue is last year, and we've been running a little bit behind last year on the new listings until this week, and this week we were up about 20, almost 30 over this time last year. But besides that, been tracking pretty much the same way as we did last year. Here's our pendings. The red are this year, the blue are last year. And if you notice, the past 3 months, we've actually been down quite a bit over last year. It was nice to see a little bit of a rebound here. Only a couple of units higher than last year, but definitely a rebound from last week, which was unusually low. As a matter of fact, about our third lowest week, pending week of the year. So good to see that rebound. If you look at our Month supply, again, we've been pretty steady in the roughly around 3.3. We did hit a 3.52 here at one point, but basically, our market's just flowing steady. It's no big jumps up or down. It's consistent. And it's really kind of interesting because with consistency, it helps you know what you're getting. It's the uncertainty that makes things more difficult. Here's the available inventory that we talked about. This is 2025's available inventory. We started the year out in January with just under 1,100 units, and we slowly grew over the year, and right now we're at 1,523 available units. We also pended 6.3% of the available homes on the market. This is up a little bit for us because our pendings were up. Our inventory's down a little bit. If you compare it to this time last year, not way off. Last year we were at 7.41%, so not bad there. But if you do compare it to 2 years ago, where inventory was so low and pendings were even higher, it definitely is a difference there. So that's what we've got on the Rutherford County market for right now. We'll come back to it here in a minute. I want to talk a little bit more about mortgage portability. I'm not so certain that someone in Washington wasn't listening to our podcast last week because we briefly touched about mortgage portability. And then all of a sudden, the president came out this week talking about mortgage portability. So on the cutting edge there, some of the talking, what is mortgage portability? Here's the challenge we've got going on across the nation. So many people that bought their house or owned their house pre-June of 2022 have a very low interest rate, mortgage rate. 2.75s, generally speaking, on a 30-year, the lowest I see. I'm sure there's somebody out there who has one lower. If you got a 15-year, you're definitely lower than that. But even if you bought your house back in 2015, 2016, where mortgage rates were higher, you probably refinanced over this time period. So we've got a lot of people locked in below 3.5% mortgage rate, 3.5% mortgage rate, and therefore they're not wanting to move. And I hear it all the time. I'd like to move. I need a new house. We've grown out of room. We won't move near the grandkids. All these things. But they keep looking at the mortgage rate, and current mortgage rates, we'll look at them here in a minute, but you're probably looking slightly above 6%. So that's just create what we call a locked-in effect. Because if you were to move, you would leave your 3% mortgage and go to a 6 or whatever, somewhere in that range. As I started doing some research on this is something actually Canada does, and I did not realize they did it. But Canada allows mortgage portability, and again, it's being talked about in Washington right now. It's something that I would like to see happen. But in my example here, let's say you have a current mortgage for $250,000, all right? And or at least your mortgage could be higher than that, whatever. I'm using the example $250,000 is where your mortgage is, and you've got 25 years remaining on that. Let's say you're going to a new home, and you need a $400,000 mortgage. So you're going to take you've got your $250,000 mortgage. You're going to put down whatever profit you make on the sale of your house. But with your new house, you need a $400,000 mortgage. Well, normally what you would have to do if you needed a total of $400,000 mortgage is you would get a new mortgage at the going rate, 6% or whatever. But in mortgage portability, what would happen is you would take the $250,000 with you, and you would then get a new mortgage for $150,000. And what they do is they blend that. So you've got $150,000 at 6%, $250,000 at 2.75%, and in this particular example, that would blend out to about a 4% mortgage. So your entire $400,000 mortgage would basically be at 4%, and you would reset the amortization to 30 years instead of 25 years. Most people going from they can stomach going from a 2.75 mortgage to a 4% mortgage, 4.5% mortgage. So we really think that if that happens, we will certainly see some movement. It will free up some inventory. A lot of this inventory is in the first-time home buyer price point, and that's where we have the biggest affordability challenge. So we can free up inventory there. By freeing that up, it will actually probably cause prices to ease a little bit, not crash. Okay, don't hear crash. Ease a little bit. That will make it more affordable for the first-time home buyers and help them get into the market. So there's a lot of positives with this. Probably the biggest negative that I see, and there's a few negatives, but the biggest negative I see is the banks won't be making as much money because they're going to be locked in at lower mortgage rates than the prevailing rate right now. And so it'd be interesting to think what the banking lobby thinks and what they try to do. But anyway, that's mortgage portability. Keep your ears open for that, and we'll talk about that a little bit more in the coming days. I have some really good information and charts for you moving forward. There's a company called Keeping Current Matters or something like that. And they put out some very interesting information. So I am pulling from what they put out this week. But one of the things they put out on the chart is the unsung hero of the housing market in 2025 has been the improvement in mortgage spreads, not mortgage rates, mortgage spreads. Now, the mortgage spreads affect the mortgage rates. Well, John, what's a mortgage spread? We don't know what that is. Okay. Well, a mortgage spread is mortgage rates are based upon the 10-year Treasury bill, and then you have the spread on top of that. And you add those two together, and that's pretty much where your mortgage rate is going to be. So the spread has a lot to do with how much it costs the lenders to provide that loan for you. They got to pay their mortgage officers. They got to pay for all their systems. They got to pay, there's just a lot of cost there. So that spread has been coming down. In the past, we've seen it around, I think the average was 1.7, 1.8. And if you notice on this chart here, it actually peaked around 3.2 maybe. And this spread has come down. Right now, we're just a little bit over 2, about 2.1. So if you'll take the 10-year Treasury and add about 2.1 to that, and that will give you approximately where the rates are. Now, if it were still at 3.2, that's nearly 1% higher on your mortgage rate. So this is something that's not talked about a lot. There's some talks in the background to do some things to help lower the cost of getting the mortgage. And if they do that, that will certainly help that spread, which will help the mortgage rates as well. So definitely paying attention to that. Interesting stat here. Only 28 out of every 1,000 U.S. homes changed hands in 2025. This is the lowest turnover rate in 30 years. Just people are not moving because of what we talked about, that locked-in effect. So very interesting there. You can see this goes back 2012. In 2021, 44 out of 1,000 homes were sold or moved, changed hands, whatever you want to say it. And you can see over the past 3 years, we've been historically low, with this year definitely being the lowest. Last year wasn't that far off. Again, these 3 years are where you got into that locked-in effect. So we talked about this last week about the Fed lowering the rates, and everybody thought it was going to be a good thing, and it is a good thing. But on the same day they lowered the rates, mortgage rates actually went up. And the reason why is exactly what Jerome Powell said here. He said a further reduction in the policy rate at the December meeting is not a foregone conclusion. It's far from it. Well, that sent the the bond markets reeling, and basically they went, mortgage rates went up. Now, with that said, it's my understanding that mortgage rates are already pricing in a reduction in December. They think that there's going to be one. I think it's like a 50 to 70%. I can't really remember the exact percentage, but they're already pricing that in. So it'll be interesting. Plus, with the government acting up, of course they all act up there in Washington, but with the government opening up, there will be some data coming out that has not been coming out, the reports. So it will certainly be interesting to see what the bond market does over the next few days. There are still over 11,000 houses selling each day in this country. So whenever we talk about homes aren't selling, not selling at the rate they used to be, but there's still over 11,000 homes selling every day. And what we are starting to see is we're seeing the housing market starting to move again. There's signs that things are happening. Again, this person, Odetta, has said after a prolonged slump that existing home market showing signs of recovery as well. So mortgage rates are trending down. Sometimes we have to look back to where we were. This is just this year. And if you look at this, mortgage rates were at about 7% this year, and they have trended down just around 6.2. They actually hit about 6.13, I think, was the average, the lowest we've seen this year. Also, some positive news. Home affordability hits its best level in more than 2.5 years in September. So prices are leveling out. Might even, in certain markets, they're coming down some. And mortgage rates are easing. So between those two things, it's certainly helping with affordability. We still need more, make it even more affordable, but it certainly is trending in the right direction. And if you look from, this is actually only from May, and if you look from May to October, the median monthly mortgage payment has dropped about $350, and that has to do with the house prices and the lower mortgage rate. So a lot of good news out there. Sometimes we don't hear as much about it, but there is a lot of good news. This is something I did one of our podcasts, 4 or 5 weeks ago. We talked about affordability and how it's comprised of three things. It's comprised of mortgage rates, it's comprised of house prices, and wages. And that mortgage rates had gone up, house prices had gone up, but wages had not gone up as quickly. And as you can see here, the wage index, even though it dropped back in like 2020, of course, with the pandemic, it has actually taken off more than what is the traditional increase. So wages are going up faster than what they normally do, and that's another good sign for home buyers. Something else, with the interest rates at 6.26, because that's where they were in mid-September, it takes about 30% of the median household income to make the monthly principal and interest payment. That's higher than what we would normally like to see, but it is down from 32%, and it was even up to 35% in 2023. So that is certainly positive news as well. Talking about the locked-in effect, this chart right here, if you like charts, you can read it. But basically, the green is anybody who has a mortgage below 3%, and you can tell that's slightly shrinking. And then the between 3 and 4% is getting to be a smaller part of the market. And the above 6% is growing right here, because really 5 to 6, 7% is traditionally it's been a normal mortgage rate. I keep saying all the time, it's not the mortgage rates, it's just how much home prices went up and wages didn't go up. So the mortgage rates have trended back to where we have seen them historically. Now, would we like them to get lower? We would. The predictions, just honestly, I will tell you everything that I'm hearing right now for 2026, most people don't think we're going to get below 5.75. Okay. If you're looking for 3 or 4%, I've been saying it for a long time. I just don't see that happening anytime soon, if ever. But you're really probably looking between 5.75 and 6 over the next 6 months to a year, more than likely, based upon all the predictions. More homeowners are starting to move now. It's freeing up inventory because you can only put life on hold for so long. There's more to life than just a home. It's being closer to kids. It's you're moving because of jobs. The house is too small for you. You've got to get a bigger house, or your house is too big and you need a smaller house. So a lot of people are moving now, or a lot more. So again, we're starting to see the market move a little bit. We'll skip over that one. Inventory continues to grow. Right now, across the nation, we have about 1.1 million in inventory. Nowhere near a crash or anything like that. You can't have a housing crash if you don't have available homes. So we are up. I mean, in 2021, we were down to a little over 500,000 homes. That's just crazy. But you go back to 2016 through 2019, and those were considered quote unquote normal markets. And we were probably averaging around 1.3 million available homes. So we are getting closer back to what would be considered normal. Plus, quite frankly, just the population's grown, so we probably need more than that. I saw a report this week that we are still way behind on the number of houses we need to meet the demand. We just have to get them where they're affordable. But even with there not being as much inventory, it's growing, but with there not being as much, when you think about the basic economic supply and demand, the less supply you have, it really affects the price. So that's the reason why home prices have stayed up like they are, is because even though some homes are sitting on the market and we have 3.5 months of inventory here, it's still considered low inventory. So the prices are not drastically dropping. All right, home sales. This is a forecast. This year there should be about 4.8 million homes sell. They're predicting about a 10% increase next year to about 5.2. I've seen a prediction of 17%. I've even seen one of 20%. So it'll be interesting. I mean, predictions there. I know they base them on data, but they're still just predictions. But the market is predicted to take off a little bit more. We're selling at a more normal pace right now. If you go back to 2021 and look at the days on the market, it was much lower than any time ever. I was talking to a buyer the other day, and they're like, "Man, homes are sitting on the market forever. I should be able to get a really good deal." I was like, "No, they're really just kind of getting back to where they normally have been. You'll get a fair deal, but you're probably not going to steal anything in this market." Again, mortgage rates. We'll look at that in a minute. I've got that. We've already seen that. Right here, this says that 24% of all the homes in Tennessee have had a price reduction. I'll go ahead, spoiler alert, I was going to go over this in a minute, but in Rutherford County, that's 41%. So, 41% of the homes in Rutherford County have had a price reduction. If you look at home price forecast, National Association of Realtors thinks there's going to be a 4% price increase. Mortgage Bankers Association think prices are going to go down slightly. And then you got everybody in between. I'm kind of in here. I think we're somewhere between. I actually think we could go slightly lower. I think we'd go down a couple percent all the way up to maybe up a couple of percent depending on the exact market you're in. But I don't see any huge movement with prices one way or another over the next year. It's John's forecast. Take it for what it's worth. Also, you got to think about, if you're thinking about buying right now, because sometimes we hear people say, well, I just don't know if I want to buy right now. I'm not sure. If traditional appreciation holds up, and in 2026, they even kind of question it here. It didn't go up a whole lot because we really don't know what's going to happen over next year. But over the next 5 years on the $400,000 house, which is probably slight below the median in Rutherford County, you may build $60,000 or so in equity. So it's still a good forecast for you to purchase a home if you haven't already, because the equity is really where most homeowners make their money. So that little part I did want to look at, and we kind of hit on this, just where mortgage rates are right now. This week they went up by 2/100ths again, so not much. But did increase to 6.24, and that is the 30-year average. I've already hit on the other couple of things about about 41% of the homes on the market in Rutherford County have had price reductions. So I hope this information helps you. It's a little bit different information than I brought this time. Please comment if you like this type of information. We're always trying to bring something of value to you so you can use. So whether you're a fellow real estate agent, whether you're one of our friends that just appreciate supporting us and logging in and seeing what we're doing, or whether you're a current client, an alumni client, or even if you're looking to move to the area. If you're looking to move to Middle Tennessee, we would love to help you. We enjoy bringing this information to you. and we bring it to you every week. So I'm John Turner, the team lead of the Turner Victory team. So reach out to myself, my wife Tracy Turner, or any one of our team members. We do really follow the local real estate market, and we would certainly love to help you. If you have any questions, any information you want to see, please comment below, because we would love to have that feedback. And we will see you next week. And until then, we certainly hope you make it a wonderful week.